You're talking to a maximalist here. I'm beyond the investor. It's not my skin is in the game. I'm beyond that. My soul is in the game. But I think that Thomas Lee, he's done some good work, and he says that Bitcoin generates all of its gains in like 10 days a year. Fundstrat Thomas Lee.
In Michael Saylor's latest interview, he explains the instability and loss of confidence in the traditional banking system, even though Choke Point 2.0 banking practices are getting taken down market-wide. With the onset of systematic chaos, investors are gravitating towards Bitcoin as a more secure store of value. He argues that Bitcoin's digital nature, ability to trade 24/7, and also self-custody capabilities makes it superior to traditional commodities like gold, citing it's the best choice to hedge against inflation. Saylor also highlighted the increasing interest from institutional investors, noting that current economic climate is promoting, quote, a stampede of smart money into Bitcoin. He believes that as fiat currencies face debasement, Bitcoin's appeal is that it's a finite asset that will continue to grow over time. He states that he is a Bitcoin maxi and that he is not speculating, he is adopting. That was a powerful reframing of crypto. To him, Bitcoin is not a gamble. It's adopting a superior monetary technology like electricity or the internet. Now let's listen as Saylor gives his thoughts on Bitcoin. And if you are invested in crypto or thinking of investing in crypto, subscribe to the channel so we can help you navigate through your crypto journey.
Trump just earlier today made a comment that he said the Fed should cut rates to ease the economy's transition to tariffs. The president is pushing for rates to be lower. On the one hand, tariffs do not go well with equities and risk assets. On the other hand, if the Fed listens to the president either directly or indirectly, we could get more liquidity. How do these competing forces impact Bitcoin?
Bitcoin is every macro trader's favorite asset because they can trade it 24/7, 365. They can trade it anywhere in the world. They can trade it with any amount of leverage, and they can cross-collateralize it with any other asset. And they can talk about it with legal impunity because it's a commodity. It's not a security. And so that makes it the most attractive of all assets to trade on a trend. If you think there's a missile attack coming, you want to sell it. If you think the missile attack was overblown and there's not going to be a war, you want to buy it. I think when people are panicking, they tend to want to do a leverage short on Bitcoin. When interest rates and when the perception is we're going to a risk-on environment or a looser money environment, they'll turn the other way. So I do think that interest rates coming in or the expectation of interest rates coming in is very bullish for the asset. And there'll be certain points where you'll probably see it rip up because of that. I think that this is a pro-business, deregulation, low regulation, pro-business, low tax, pro-innovation administration, in general and everything they're doing. All of those things will be good for Bitcoin over time. I think deregulation is very good, and I think low interest rates are very good.
Just a quick follow-up to that. There was a counter-argument I've heard from other crypto investors that a pro-business administration is actually bearish for Bitcoin short-term because the central bank does not need to ease as much. Perhaps the recession could be stalled by pro-business policies, and liquidity flows would not have a positive impact on Bitcoin because of that. How do you respond to that?
I think there's a lot of double reverse logic that takes place in the macro trading environment.
Yeah.
Like, for example, if you knew there was lots of inflation over the long term, the number one thing to hold is Bitcoin.
Yeah.
But when people print a big inflation number, Bitcoin will trade down in the short term. But the double reverse logic is inflation is high, therefore the interest rates are going up, therefore money is getting slurped out, therefore I should find something to sell, so I'll sell Bitcoin. And that's why I would say there are basically two ways to think about Bitcoin. Actually, there's three views. There's the trader, there's the investor, and there's the maximalist. Okay, the trader says it's an asset, I can get a handle on it, I can 50x lever it long and short. They're obsessing over whether or not good news is coming, because good news is bad news and bad news is good news, right? And then they want to make sure they're the first one to get the bad news so they can treat it as good news so they can get out of the trade before the bad news manifests, or something like that. Yeah. And if you're one of those traders, you know who you are, and more power to you. I'm not that guy. Then the investor view is, this is the dominant digital monetary network in the world. It's going to go up by a factor of 10 to 100. And I'm just going to hold it like Apple, like Facebook, like Google, like Microsoft. I'm going to hold it like my big tech monopoly for the next decade. And it's going to jerk around a bit, and I'm going to buy it on dips. The maximalist view is, this is property rights for 8 billion people. This is the greatest opportunity of the 21st century. This is economic empowerment for every business, every country, every family, every individual, right? I'm going to support it at all times, every way I can, forever, okay?
Michael Saylor is not fear-mongering, he's forecasting. Bitcoin and crypto are disruptive technologies that are reshaping the world. Saylor uses historical patterns of currency debasement and collapse of currencies throughout history to bolster his stance, with references to the collapse of Rome, Weimar Germany, and Venezuela, to make the compelling case that fiat is always doomed to fail and that Bitcoin is the best bet against inevitability. He makes Bitcoin sound less radical and more responsible. This is a critical shift in his argument. It's no longer about freedom or philosophy. It's a mandatory financial responsibility. If you don't hold Bitcoin, you're actually irresponsible with your capital. He also throws out the possibility of BTC hitting 10 million per coin as a natural path for the asset class, suggesting that if fiat systems collapse, Bitcoin will be the last thing standing and the only option. Bitcoin is not just a better investment, it's literally the only investment. It's a lifeboat. The global financial system is melting down, and Bitcoin is the only answer. Now let's listen in as Michael Saylor continues to give his insights on the future of finance.
Well, one of your rules of Bitcoin, you have 21 rules of Bitcoin, Michael, is, well, they're all really interesting, but one that stuck out to me is Bitcoin is powered by chaos. So you made a reference to a Swiss bank during World War II, for example. What is this current chaotic environment? What is the chaos currently that will drive Bitcoin to new highs?
Well, there's like 100x more capital invested in the securities, the equities, and the fixed income securities of corporations. And so if we look at the chaos over the past few months, if you're invested in a Mexican company that ships products to the US, when the tariffs change, that's an anxiety-inducing event. If you're invested in a company that sells products into Canada and Canada changes their tariffs, that's an anxiety-inducing event. This morning on CNBC, the story with the breaking news was the EU is considering placing material fines on, I think it was Apple and Google, targeting US-based big tech companies. And, Apple's response is regulations from the EU will prevent us from serving our customers. And the commentator speculates that the fine could be 10% of revenues. And if you're an equity investor, that's got to give you anxiety. So I think the real key here is wars create anxiety. Wars are bad for business. Fires in LA are bad for property. Hurricanes are bad for business. Tariffs, by the way, the end of wars are bad for business. There's a whole set of investors that are having anxiety because if the war ends, their stock crashes. The war on COVID created a lot of equity crashes and crashes of all sorts of assets, explosions of other assets. But when the war on COVID ended, it was really bad for the pharmaceutical stocks. And so the creation of wars, the cessation of wars, the possibility of tariffs, the possibility of no tariffs, all of these things create anxiety. They devalue assets. And, chaos is just a manifestation of entropy. And the whole, when I was at MIT, we had this tongue-in-cheek joke about thermodynamics. We said, here are the 3 laws of thermodynamics. You can't win, you can't break even, and you can't get out of the game. That's the 3 laws of thermodynamics. And that describes entropy. It's like bad stuff's happening, your warehouse is rusting. The highways got blockage. The plane crashed. A storm hit. I have the perfect business, and then there's a hurricane, and I have to cancel the conference. Okay, so when will that end? That will never end. But what if I could actually get out of the game? Right? What if I actually could create a business where here's a business where there are no fires, there are no wars, there are no tariffs, there's no product obsolescence, there are no competitors, right? There's no property tax, there's no rent control, there's no expropriation. What if I had a business that was not facing all those risks? And that's what pure digital capital is, that's what Bitcoin is. But now, what if I posit this? What if I said, all the money in the world is facing all that risk, and here's an escape from all that risk. And the only reason they haven't bought it is they didn't know about it, or they didn't have a channel to swap the risky thing for the riskless thing. So Bitcoin is powered by chaos, because chaos will never go away. It's always going to devalue all of the traditional physical and financial capital assets, and it's going to be the driver that causes all the smart money in the world to sell their physical and financial assets and to buy a digital asset. And so really, as the world gets educated and as regulators create on-ramps, right? When your bank handles Bitcoin, when a big tech company can wire $1 billion to the bank every week and buy Bitcoin, they'll just be wiring $1 billion and swapping it out because it's easy and it's rational. So that's really what you're looking at, and that's why I think it's just a very elegant and beautiful asset.
In the big picture, central banks are printing into oblivion. Trust in traditional institutions are eroding, and inflation is burning through savings. Chaos will always affect industries, and fiat currency will historically collapse. This is not some distant dystopian future. This is all playing out right now, and Bitcoin and crypto are a hedge against the chaos. Whether or not you agree with Michael Saylor's message, it's powerful. You can either stay in the system and sink, or you can adopt Bitcoin and rise. But what do you think? Thanks for watching. If this video was helpful, subscribe to the channel. And if you have anything to add to the conversation, comment down below.